Morning guys, this is Mr. Shage. If you're watching this, you're definitely at a place. Please don't forget to subscribe to our YouTube channel by clicking that subscribe button down there, and I promise you that will make your academic problems a thing of the past. With that out of the way, let's get into the lesson. And oh, before I forget, I just wanted to let you know guys that I appreciate you guys subscribing to my YouTube channel. We are only one subscriber away from reaching 3,000 subscribers, and that could only happen because of your contribution. So please don't forget to tell your friends, to tell your loved ones, anyone who's doing accounting, just tell them to subscribe to our YouTube channel. And I promise you that their academic problems of accounting will become a thing of the past. Now let's get into the lesson. So here we have an income statement from Ahmed Traders that we must do, and then it comprises of 45 marks. 45 marks, it's a lot guys, so we need to make sure that we are really sure of our story, and this should be done in about 40 minutes. So you need to make sure that you also practice in terms of time management. So it is now 0550, so by around half past, if we really are able to manage our time well, we should be done with this income statement according to the time management that they've given here. But remember, for me it might take me a little bit longer than that because I'm explaining for you. So let's start by entering the information that we are given. So we have that information here, and then I'm just gonna check on the trial balance. So this is the question 2 that we are doing, and then they are saying that the following information was taken from the books of Ahmed Traders on 28 February 2023. This information is very important because it shows us that our year ends on 28 February 2023, which is the last day of their financial year, and they're saying that the business uses a markup of 100% on cost. What does this information mean to us? It tells us that their cost price is 100%, the profit that they are charging is 100, so therefore their selling price is equals to 100 plus 100, which is equals to 200. So their selling price is equivalent to 200%. So that's what you need to translate from this. Number one, you are required to prepare the income statement, and then this will give you 40 marks. And lastly, you have to do the trade and other receivables note. Very important for you to know the contents of each and every note. So let's start with what we have here. We are going to firstly start with the income statement. So in terms of the income statement, we have our sales as a question mark, meaning that we have to look for it. And then when we check here, cost of sales has already been recorded for us, so it means we move on. And then next they are saying that we have a discount allowed of 13,350, so we need to check if that discount allowed has already been recorded, and they did record it, so I'll just check it. And then next we have water and electricity for 68,950, so let's check if that was recorded. So it was indeed recorded, so there's no need for us to record it again. And then we have telephone for 162,500. Let's check if that was also recorded. So indeed they did record it, so there's no need for us to record it again. And then after this, we have okay, insurance is 162,500, so we need to check if that insurance is done. So they've also recorded insurance, and telephone I think is the one that was not recorded. Insurance is recorded, but telephone was not recorded. Okay, so let's see. Our telephone bill is 61,950, so we'll include that telephone, and then it's 61,950. Okay, and then the next one that we have is discount received of 19,600. So you need to go to your receipts and check if it's there, so we can see that it is appearing, so we can move on. And then we have rent income for 89,650, so we enter it because they did not record it. So we have rent income, and then the amount is 89,650, so we'll record that 89,650. And then after this we check what next do they have. They have donations for 42,650, so we'll also have donations under expenses, donations, and then the amount is they said it's 42,650, so that 42,650 will come here. Okay, Now, what are we going to do next? We have stationery for the 128,150. So that stationery, when I check here, they did not record it. So we'll record stationery 128,150. So that part has already been recorded for us. And then we have bad debts for 30,600. So you must also record that because they did not record it. So bad debts for 30,600. And then after this, we have bank charges for 8,000. So those bank charges must be recorded. So we have our bank charges, okay, for 8,000. And then after this, we have advertising for 139,050. So we'd have advertising 139,050. Okay, so we'd have 050 here. And then from there, what we have is, you can see that sundry expenses, it's a question mark, so it means it's your balancing figure. So just write it. So we'd have sundry expenses as a question mark, so it's our balancing figure. We need to look for it. Don't collapse when you don't get it. And then the next one that we have bad debt recovered for 9,000. So we need to check if this 9,000 was recorded under incomes and it was not recorded. So we have bad debts recovered, and then they said it's 9,000. Okay, so now let's go back to our information. So remember, they gave us information about markup, right? So that information about markup will help us to get our selling price, but we need to check if there are any adjustments where there was a return. I would like to conclude my calculations with that sales amount, that part at the top, because we will need to check if there are things that affect it or not. Okay, so next transaction says that goods with a cost price of 19,000 before stock taking. So meaning that when they were doing the stock taking, the impact was already recorded there. But here they're saying that they were donated to the local. Oh, yes, they said before stock taking. So in the stock taking that you will have, this 19,000 will not be there, but we need to get what they are saying to us. So they're saying that they were donated to a local community that was affected by floods. So the keyword is that those goods were donated. So it means that your donations are increasing. And then they are saying that no entries have been made. So although the stock was physically taken out of the business, but in the records were not updated. So it means that the movement of this stock here of 19,000 is included here, but the problem is the records do not have that movement. So it means your trading stock from the trial balance does not include this donation. So our trading stock according to this is 371,900. So under this 371,900, we need to remember what must happen. Remember, when we do donations, we increase our drawings and we decrease our trading stock in this case, because they are donating stock. So it means we must say subtract 19,000 here because our stock is decreasing. Okay, next they're saying let me maybe look for a better pen color. So next, they're telling us that the owner took a stationery for his son's use. So it means they're talking about drawings here. So he took stationery for his son's use, and then they're saying that the bookkeeper made the following entry. So he debited drawings. This one is very correct. The drawings part where he debited, it's fine, but the problem is he credited trading stock. Remember, he was actually supposed to credit stationery because that's the stationery that was taken, not trading stock. So it means what they've done here, we need to reverse their mistake. So we'll say plus 2,500 in our trading stock because they took it out by mistake. They were supposed to take out stationery, but they took out drawings in the record. So what we must do, we must then go back and show the effects of what this was supposed to do on the stationery. So when we go to our stationery, for our stationery, we are supposed to decrease it by 2,500. So under stationery, we are going to say minus 2,500. Okay, so say minus 2,500. Why? Because stationery was donated. Then you're done with this. Then next, they're saying that a fiscal stock count took place. A fiscal stock take on 28 February shows the following items on hand, meaning that these are the things that were remaining or not used. Okay, very important for us to note this. So they're saying that our trading stock amounted to 326,600, but here we need to check what our records saying we should actually expect with regards to this. Okay, so now unfortunately I can't show my calculator here because these gadgets, they limit you in terms of the number of windows that you can open. So when we say when we do this part here, it will tell us how much we should expect to be on hand. So if you take 371,900, you add back 2,500, and then you subtract okay, sorry. For your trading stock, if you say 371,900 plus 2,500, and then you subtract 19,000, it will give you 355,000, 355,400. So this is what you are actually expecting to get when you do your fiscal stock count. But when you look at this, you don't actually get this. Okay, so it means we will have a shortage. We'll come back to the effects on stationery. So when you record your trading stock deficit, you must show all calculations. So here would have trading stock deficit, but we must start with updating the ones from the records first. So remember, you will say 371,900 minus 19,000 and then plus 2.5. Then you subtract your fiscal stock on hand that was given to you, and they said here the fiscal stock on hand is 326,600. So you say minus 326,600, then it will give you the value of your fiscal stock on hand. So when we say 355,400 minus 326,600, it gives us 28,800. So our shortage of stock is 28,800, and this will give you around 4 marks. And then the other thing that you must record, remember, is stationery. So they said we did not issue stationery to, we did not use the stationery to the value of 2,100. So that 2,100 must be subtracted because we are trying to get the cost of the stationery that was not used, that was used for the year. So this 2,100 is part of what was not used. So that's why we are subtracting it so that we can get the cost of the stationery that was used. And then after this, we can move to the next transaction. They are saying that a debtor A Hajat was declared insolvent. I normally tell learners that when they say someone is insolvent, in our everyday terms, we can use the word broke. And they're saying that her estate paid out 25 cents in every rent, meaning that out of each and every rent that he was owing us, only 25% of that one rent was paid. Okay. And then they're saying that the business received an EFT of 9,000. This transaction was not recorded. So here they tricked you. They said we did what? We received we received the business received an EFT of 9,000 in the business received an EFT of 9,000, right? So we received 9,000 from him. Are we together? And then now here you need to be very careful. There's a trick. They are going to try and trick you, but you must not be shaken. So the part where they want you to record is where they're going to give you an instruction. Are we together? So that 9,000 that they're talking about, remember, we have bad debts recovered. I saw something. Let me show you on the answer book. We have our bad debt recovered as 9,000. So that 9,000, that's the one that they were actually referring to. That 9,000 part in the books of the business appears, but the problem that does not appear is what they were supposed to write off. Okay, so the 9,000 is there in our books, but the writing off part is what was not recorded. Please be careful of this. So now they're saying that this transaction was not recorded. The remainder of the outstanding balance must still be written off. So in other words, you need to show the impact of what will happen when we write off what this person was owing us. Okay, so as I stated before, that in this transaction, what you need to make sure that you need to make sure that the 9,000 is there in our books. You saw it under, you saw that 9,000 under bad debt recovered. So it shows that the 9,000 in our books does appear, but the only thing that was not recorded is the fact that they had to write off someone. They gave it to you as an instruction indirectly that you must write off the remaining balance. That's what the examiner wants you to record. So guys, when you read this information, you need to be very careful and understand what you are required to actually do adjustments for. Okay, so they did tell us that the transaction was not recorded, but remember, what was actually not recorded is the balance that has to be written off. The 9,000 is already included in our books. That's why we have it as bad debt recovered under our operating expenses. So please guys, tread carefully when it comes to this. Okay, so that bad debt recovered, as I said, the 9,000 is already there in our books. So all we need to do is to find out how much the person could not pay us. So the person, remember, paid us 9,000. The person paid us 9,000, which is equivalent to 25%. So it means your 9,000 is equivalent to 25%, and then so the remaining balance is your 75%, because once we say 75 plus 25, we should be able to get a 100%. So if we say 75 divided by 25 multiplied by 9,000, it will tell us the amount that this person will actually owe us. Are we together? And then here I've just remembered. Remember, you are also required to do trade and other receivables, because some of these transactions you will forget to record them. I always suggest to learners that make sure that you record your things. So remember here, we'll have trade debtors, and then less provision for bad debts. Provision for bad debts, and then it will give us our net trade debtors. Okay, and then if we are saying less, it should be in brackets, and then here we'll have our prepaid expenses, and then we'll also have our accrued income. Okay, so you know this ones, there's no way you're not gonna have them. So when we look at this, remember, we are writing off a debt, so it means that our bad debts is increasing, if you remember very well. So under bad debts, guys, because we are writing off, we are going to say plus 27,000. Why are we saying plus 27,000 under bad debts? Because we are writing off someone, and I know it's a very huge amount. You might actually feel like maybe you made a mistake somewhere, but remember, you are controlled by what you were given. So you can't just want to do things on your own. So this will be plus 27,000, but remember, this 27,000 must be subtracted from the debtors control. So we are also going to say minus 27,000 here. Then you are done with this. Okay, so now let's go to the next one. Here they're saying a storeroom was rented out from the 1st of June 2022 at 11,000 per month, and then the rent was increased by 7.5% on 1 December 2022. Provide for rent on the outstanding amount. So here our rent income, number one, this person started from June, so they are supposed to pay us from June, July, August, September, October, November, December, January, February. Okay, now we know that they were paying 11,000 from June up until November. So it will be 1, 2, 3, 4, 5, 6. So it will be 11,000 multiply by 6. Let's see how much it is going to give us. So if you say 11,000 multiplied by 6, it will give you 66,000. So we have 66,000, and then from there it's going to increase 7.5%. If you say 7.5 divide by 100 multiply by 11,000, it will tell you that it's 825. So it means that they will now be paying 825,000 plus 11,000, which would give you 11,825. Okay, so let's see, 11,825 multiplied by, we are supposed to receive for up until December, so we are short by 3 months here. Remember, this person was with us from June, so June, July, August, September, October, November, December, January, February is 9 months. So if we say 11,825 multiplied by 3, we are supposed to get 35,475. Okay, so let's see when we add the two. So 66,000 plus 35,475 shows us that we are supposed to get 101,475. So the rent that we are supposed to receive, our rent income received for the year is supposed to be 101,475. But have we received that? No. So if you say 89,650, 101,475 minus 89,650, it gives you 11,825. So this is your accrued income. So under trade and other receivables, you also go and record that accrued income. Remember, on the trial balance under trade and other receivables, we do not have specific figures for that accrued income. So you'll only have 11,825. Okay, then you are done with this. Then the next transaction says that the loan statement, the balance is 800,000, and then the repayment, you are paying 16,000 per month. Remember, this thing, that's for the year, so you must multiply this by 12. So if you say 16,000 multiplied by 12, it will give you 192,000. Because you are repaying, this should be in brackets, and then they are saying that your interest is a question mark. So remember, when you look for interest, you are going to use bottom up approach. Your closing balance, you plus repayments, you minus your opening balance. So this will fall under interest expense. So when you come here, you're going to say interest expense. Okay, then you are going to say, they said the closing balance is 691,000. So you say 691,000 plus 192,000, then you subtract 800,000. Then you are going to check if there's any information that will affect this. Okay, so we don't know for now. We'll go with our adjustments and just continue. So the next transaction says that depreciation is calculated as follows. So they've given it to you. The reason why they calculate it for you is because in paper 2, you are going to calculate depreciation on fixed assets. So because they don't want to have double testing, that's why they want you to, they give you depreciation in paper 1. Okay, so our depreciation for equipment is 33,040. So we'll have a section for depreciation, depreciation, and then we're going to record that we have 33,040, 33,040. Then we are going to say plus 161,250. So we have plus 161,250, and then it's going to be 33,040 plus 161,250, and then the answer that we are getting is 194,290. So we have 194,290. Then you move on with your information. Okay, so the next part that we are expected to do is as follows. So now the next part here, they are saying that the business entered into an advertising contract. Okay, so they're saying that the business, oh, before we come here, we have to go through this first. Okay, so number 8, it's very important. It's easy because you just update your accounts. Okay, so they're saying the bank statement revealed the following items that have not been recorded in the relevant cash channels. Number 1, EFT of 2000 received from H Oma, a debtor who was previously written off. So once someone who was previously written off pays you, we call them we call that bad debt recovered. So under bad debt recovered, you'll have plus that 2000, because that person has now received some money. Utsuhile malambane wa go patela. Okay, so that part we have recorded it. Next, they're saying service fees, credit card levy, and ATM fees will regard them as bank charges. Okay, so let's add them together. So if you say 365 plus 140 plus 225, it gives you 730. So our bank charges will increase by 730. So under bank charges, we are going to go there and say bank charges, we are going to say plus 730. Okay, and then next we have interest on favorable balance. You remember this from your BRS. So interest on favorable balance is your interest income. So that's 780. um that 780 will come here. Interest income 780, they've already recorded it for you. Then you move on. Then next, they're saying the business entered into an advertising contract with a Mickey Advertising Group. An annual premium of 64,800 was paid for the period ending 31 July 2023. And then they said it was paid in full on the 1st of August 2022. So remember, to see this, to make things easy for you, you are ending in February. So it means anything outside February, it is prepaid. So from March up until July, those are our prepaid months. So you'd have March, April, May, June, July. So your prepaid months is how much? Is 5 months. Okay, remember your year ends in February. So this 5 months is prepaid. So you must subtract it. So to get the amount, you're going to say 64,800 multiplied by 5 over 12, because they gave you an annual premium. So if you say 64,800 multiplied by 5, let me do it. 64,800 multiplied by 5 divided by 12, it's going to give you 27,000. So this 27,000 here, it's a prepaid expense. It will be entered also under, remember, in terms of advertising, you'll minus that 27,000. Okay, and then you also need to include it as a prepaid expense under this. So this 27,000 will come here. And then next, um so next they are saying that the telephone account for February was received with the cost of 1.8. The amount will be settled in March. So we got the statement that we are owing telephone, so therefore it means our expenses should increase because they are short by 1.8. So under telephone, you are going to say plus 1,800. Then you move on to the next one. Next one, it says that provision for bad debts was increased too. So this is your new balance. Remember, this new balance, you must use it in your receivables also. Okay, so I'm just going to enter it before I forget. So trade receivables is 17,600 here. Now let's check last year's balance, how much it was. So last year's balance, according to the trial balance, provision for bad debts was 17,000. So if you check, we moved from 17,000 to 600. So it means the difference is an expense. Okay, as I showed you in class. So we'd have provision for bad debts adjustment, and then we are going to show that 17,600 minus 17,000 gives us 600. Then you are good with this part, you are done. Okay, now the next part that we need to do is the next transaction that follows. But in this, I don't know, the person who was compiling this missed the last adjustment. there was an adjustment from June that was saying that operating profit, let me write it. So number 12, operating profit is 20% of sales. Unfortunately here, I think it overlapped on the other page, so they forgot to include it. Okay, so now it means we firstly need to make sure that we get our sales. Okay, so let's get our sales. Remember the markup that we are given, that's what we are going to use. So your cost of sales will be, to get your sales, you take your cost of sales 1,757,000, then you are going to use the markup. Okay, so because you want sales is 200%, you'll multiply this by 200 over 100 so that you can get your sales. So let's see, 1,757,000 multiply by 200 divide by 100, it gives us 3,514,000. Okay, and then when we take this and say subtract 3 million, remember this is this double, so your answer will still be 1,757,000 because the markup is 200%. So it means your sales is cost of sales twice. Okay, so now let's try to wrap this up. So if you say 9,000 plus 2,000 is going to give you 11,000. So if we say 11,000 plus 101,475 and then plus 19,600, it gives us 132,075. 132,075. So when we add this to get our gross profit, we are going to say 1,757,000 plus 132,075, and it gives us 1,889,000 and 75. But we must remember that they said our operating profit is 20% of our sales. So our sales is 3,514,000, 514,000. So we say 20 divided by 100 multiplied by 3,514,000, and then it will give us our operating profit. So let's see. So now 3,514,000 multiplied by 20%, it gives us 702,800. Okay, so we got that 702,800. I just want to verify if I'm gonna check June because they updated it from June. I'm just gonna check if it's exactly how I remember it. So okay, that's the right percentage. So okay, it's fine. So now, so here, now obviously we know that if they gave you you can work your way down and look for other things after. Okay, so they gave you your, so in terms of your uh, profit before interest expense, you can get it because you have your operating profit, and this is how smart you need to be in the exam. Whatever that gives you trouble, let it be the last thing that you finish with. Okay, so let's see here. So we have 702,800, 702,800, then we'll say plus 780, it will give us 703,580. So our profit before interest expense 703,580. Okay, so then from there, what you do, you look for your interest on loan. So there's nothing that affected this, so we can close it off. So if you say 691,000 plus 192,000 and you say subtract 800,000, it gives you 83,000. So it means our interest on loan was 83,000. So when we say 703 580, then we say subtract 83,000, it will give us net profit after tax, which is 620,000 508. Then you are done with the bottom part. Okay, so all you need to do is to close up your expenses, finalize them before you go anywhere else. So remember, here we'll still our donations, let me check if they are affected. You remember there was a time when they were talking about the donations of 19,000. we forgot to update on our donations account, so that 19,000 will come here. So it will be plus, let me just check if I still remember the transaction very well. I did note it that we'll have to increase our donations, so we must increase them by 19,000. So here it will be plus 19,000. There's nothing else. Okay, so let's update our telephone. So 61950 plus 1.8, it gives us 63750. So we'd have that 63750 here. And then for donations, it's going to be 42650, 42650 plus 19,000, which gives us 61650. So we'd have that 61650 here. And then for stationery, we have 128,150, 128,150 minus 2.5 minus 2.1, which gives us 123,550. Okay, and then from there we have 30,600. Okay, let me confirm this other one. 128,150 minus 2.5 and then minus 2.1. Okay, it's fine. Then for our bad debts is 30,600 plus 27,000, which gives us 57,600. So that 57,600 will come here. And then for our bank charges, it's 8,708. Okay. And then for our advertising is 139,050. 139,050. Then you say minus 27,000, it gives us 112,050. Okay, so we already got our final amount here. I can see almost everything is wrapped up, so we are almost done. So now to get our operating expenses, you take your gross operating income. So your gross operating income, you subtract your operating profit. You need to know bottom up. Okay, so when we do it in terms of figures, our gross operating income is 1,889,075. So we're going to subtract that 702,800. So when we subtract that 702,800, let's see how much we get. So 1,889,075 minus 702,702,800. Let me see if it's 702,800. So it gives us 1,186,275. Okay. So like what we then need to do to get our balancing figure, we need to take this total that we have here, that we have the 1,186,000, 1,186,275, and then let me maybe use a different pen here because it's a balancing figure so that you can remember. So your 1,186,000 275, we will subtract it from the total that we get when we add these expenses excluding sundry. So if you say when we do our calculations, we are going to say, let me see, 13,350 plus 69850 plus 162,500 plus 63750 plus 61650 plus 123,550 plus 57600 plus 8730 plus 112,50 112 and 50 plus to 800 plus 194290, 194290, and then plus 600. It gives us 800 and so the total that we are getting from this, my calculator just disappeared, so it's 896,720, 896,720. So to get the total, let's see the difference. 1186, 1186, 275 minus 189,720. Okay. Okay. 89. Okay, I think I made a mistake in terms of uh I can't remember if it's 1,800,000 and okay. I omitted one figure. I'm just gonna add my expenses again that I get here. So 13,350 plus 68950 plus 162,500 and then plus 63750 plus 61650 plus 123,550 plus 57,600 plus 8,730 plus 112 and 50, and then also plus 28,800, 28,800, and then also plus 192, 194,290, 194,290, and then plus 600. Yeah, I made a mistake here. 89720, 895,820. Okay, let me erase here. I don't know how I got this amount here. So remember, guys, it's going to be your 895,820, 895,820. Okay, so we get the difference between the two. So let's see. If we say 1186, 1186, 275 minus 895,820, we are getting 290,000 455. Okay, so every time when you are requested to use something as a balancing figure, you must know this. It's a common question. It's not my first time seeing a question like this up here. So guys, you must really make sure that you always check if your things were calculated correctly or not. So in a nutshell, this is how you were expected to answer this question. But I just remembered that we had not yet concluded our trade and other receivables, so I'm just gonna quickly conclude it. So remember, this will not change. You'll have your 27,000 here, you'd have your 11,825 here, and then so let's get the trade debtors that will be left with. So you are going to say for that trade debtors, you are going to say 178,400, 178,400, then you subtract your 27,000 thousand, it gives you 151,400. So you have 151 400, and then from this you subtract 17,600, which will give you 133,800. Okay, so 133,800, 133,800 plus 27,000, and then plus 11,825 will give you 172,625. Okay, that's how you complete the trade and other receivables note. So what is important to note here is that when you deal with a question like this, you need to make sure that you use all the information that you have, your format, you are sure about it. So I think we've taken around 45 minutes. So I took 5 minutes extra. Remember, I was also explaining to you, like I said. So you should be able to finish this in the required time. Okay. And then always verify your figures, guys. Make sure that you go back and verify just to check if what you did was correct. If you want me to become your online tutor, you're more than welcome to get in touch with me by using the details that will be available in the description of this video, or you can simply text me on 0730363208, available on both WhatsApp and call. And maybe if you don't really need me to be at line, but you want to donate something to us, you're more than welcome to do that, so that we can be able to cover the costs that we incur in making sure that this lessons are available for you. Thank you so much, guys, for watching. May God richly bless you. Shalom.